What's going on, traders? Welcome back to another edition of Trade Masters. This is your reigning champ, Coach Tyler, hanging out this evening with Greg. Greg, what's up?
Not much, man. Happy to be back. Happy to have another shot at the title there. So looking forward to it.
It's going to be fun. It's going to be fun. If this is your first time joining us, the purpose of these Trade Masters is to illustrate how veteran traders find and build trades. You're taking a peek over our shoulder. You're going to see us break down a price chart, build a strategy that will profit from our bias. And we're using Thinkorswim's platform, so you're going to get a basic idea of how to build trades using that as well. There are 3 rounds, and this is a competition. So round 1, we will pitch delta trades or directional positions, and we each pitch one. And then you guys get to choose whose was better, which pick did you like the best. Then we'll go to round 2. It's going to be a theta round or a cash flow based trade using options. And then round 3 is a wild card. We get to pitch whatever we want. Greg already told me he's going crazy today. I got some interesting things as well. So we'll try to have some fun here. Best out of 3 wins comes back the next week. Greg's gunning for me this week. I've been here for a few weeks. I'm getting comfortable, Greg. Come at me.
Too comfortable.
Yeah. So round 1, I'm going to defer to Greg. Greg, I'll let you kick it off, and then I will go.
All right. Well, I am going right after your jugular, sir. I'm going after one of your favorite companies in the whole wide world. Mickey Mouse is in trouble. That's all I know.
Okay.
Little Disney action here. Nobody's liked the mouse since basically last August, pretty much almost a year now. This thing's just been getting destroyed, and it looks to be breaking another shelf here today. It did give us a green candle, but it did dip below that 92 level there. I just honestly don't see a lot of upside in this. It looks like it really hasn't given us anything. February, we got a little boost there, but everything else has just been down, and I really don't see anything holding it up. So for me, Walt Disney looks like a very good short candidate. And that's really what you want to look at least the way I look at things is I look at what the market's doing. I'm still pretty bearish on the markets. I'm not seeing anything I like out of the indexes right now. And then you start to look at the individual stocks here. I did a fair bit of searching today to find some decent trades, and it was a challenge, right? These markets are a challenge, and it's not really giving us a really easy way to trade. But I think the easier side here is to the bearish side. So I looked at a couple of different things with the Walt Disney here. Going to go right to the August expiration. 37 days is good for both cash flow. It can be good for depending on what kind of strategies you want to do. Sometimes you need a little bit more for delta strategies. Sometimes you can play them, very quickly. I believe that I should go into the weekly chart here. I believe if Disney falls from here, it's got a fair bit of ways to go down there. So we're sitting right around that 91.5 level. The next real level of support, if you had to ask me, would be right around 80. So there's a bit of a dip here. You're talking about $11, with the weekly ATR here of $8. So you're 1.5, almost 1.5 weekly ATRs before we catch the next level of support. So I will preface this by saying earnings is, I believe, on August 10th. So the trade that I'm going to give you today, I recommend closing it before August 10th. So you've basically only got between now and then, you got about a month really, somewhere in that 30-day neighborhood to get this trade to work out. So I looked at a couple of different trades. The first one I looked at was a bear put spread. I like the bear puts typically. The only thing I'm not thrilled about right now, because the market is so manic, because it's still leaning bearish, but we really haven't had a big rip your face rally off. We had one recently, but it wasn't as aggressive as I expected. So I'm kind of putting that into all the trades that I'm doing, and I'm looking at that from a risk perspective. Okay. I still believe that the market is going down, but I also understand from trading experience that at some point in time, it's going to rip to the upside like nobody's business. And you don't want to get caught up in that with a lot of risk. So I looked at doing a bear put here. So I was going to buy the 90 and sell the 80. And you were looking at about a $252 risk here. Okay. For some folks, $250, risking $250 is fine. If we analyze this trade here, I'll just go through this quickly. Got to get rid of that one though. Got a whole bunch of trades on here, Tyler. That's what this one looks like. All right. So you're risking 252 essentially to make 748. So that's actually a nice profit, right? That's what, not quite 3-to-1, very, very ballpark 3-to-1. So that's not bad. The problem I have with this one is I'm not really wanting to risk 252 right now because I'm not sold on what the market's going to do. I'm still kind of in limbo. So I looked at a trade that I liked a lot more than this one. I'm still bearish. Okay. But what I wanted to do was I wanted to play it a little bit more aggressively, but for a little less overall money. So what I looked at here was a back ratio spread. I'm going to sell the 95. I'm going to buy 2 of the 90 puts. So if I change this to custom here, change this to 2. Okay. Now I'm risking $1.38. Okay. So I've cut my initial debit by neighborhood of $120 there. So if we look at this particular trade and see how it stacks up. Okay. Let me just get right to the right one there. We'll get rid of that one. There we go. So if we look at this one, I'm going to spread that out a little bit. There is risk at the short strike price or at the 90 strike price here. You do have to be careful of that. If this thing doesn't move, it can be challenging. However, I like that the risk is lower, and my expectation being that it can get to 80. Okay, so 80 would net us somewhere in the neighborhood of about $550. So the other one was gonna cost us 252 with a potential for 750 or 748. This one we're risking 138 and potential of, let's say, if it only gets down to our support level of about 540. So again, there you're well over the 3-to-1 threshold there, probably closer to 3.5-to-1 if my math is correct. So I like the risk reward that this sets up. The only key to doing a back ratio spread is you cannot let it go to expiration if the price does not move. Well, this is good for us anyway, because we need to close this before earnings anyway. I don't really want to sit through earnings. Some folks might want to sit through earnings on this one because they know their risk up or down. And if it got a crazy move either way, you would have defined risk and reward. For me, I'd rather close this before earnings comes. So that would be on August 10th when the earnings is. So for me, I like this back ratio. It's a little bit more aggressive of a delta play, but if we get, like a lot of pain here for Disney, if it breaks this lower support level here at the 80 or 79 there, we've left ourselves with an open-ended risk graph. So we can kind of hit a home run on this, or even if it just does what we want it to do, it's still a 3.5-to-1 risk reward. Okay. So that's my pick in Disney for Delta here. It just doesn't look to me like there's anything building here for Disney. It wanted to break down today. It did get a bounce. I would probably only enter this trade if it got below the low of today. That would be the trigger point for this trade. But I really like the back ratio spread here. Low risk, high reward.
Very nice. Mickey's been breaking my heart. Mickey owes me a lot of money. And I have no defense. There's no technical defense against the bear trade. I hope this sucker doesn't go to 80 in the next 4 weeks before earnings. That would be not great. That would be not great. That is the next stop. Look, but that is the next key level. So I can't argue with the with the target there. Okay. All right. So Mickey Mouse.
Shots fired.
Shots fired. Yes. All right, so you got the bear or back ratio on Mickey Mouse. I'll match your complex directional play with a directional play of my own. I'm cheating here a little bit, Greg. I'm going directional, but I'm going bi-directional. Okay, I'm going bi-directional. I would normally reserve this for the wild card round, but this is the closest trade I have of the 3-2 directional. So she's going to have to suffice for round one. Take a look at Netflix for me. Let's take a look at Netflix. And obviously, weekly chart looks horrific. The prominent feature of Netflix's chart are the last two disastrous earnings gaps. This thing has moved a massive amount on the last two earnings announcements. And we have another earnings announcement coming up next week, I believe. I think we're about 6 days away. I wanted to build an earnings-based play on Netflix. I'm not brave enough, Greg, to bet against another gap. Okay. I'm not brave enough to do a condor. I think I'd rather structure myself to go long volatility. Listen, oftentimes you've heard the phrase that the generals fight the last battle, right? They lose because they were fighting the prior war, and it's different this time. Listen, maybe Netflix doesn't move a ton, but you can make the case that, like, listen, if they screw the pooch again, maybe you have another big down gap. But if they show that they're doing a little better, then this pessimistic, terrible chart justifies, maybe you get a quick pop higher, right? So I could make the case that maybe it sets up for a decent sized move. So I want to do a limited risk trade that makes money if Netflix goes up too much, or at least up more than expected, right? Or maybe down as much or more than expected. Okay. So when I looked at the options, I'm going to build a debit condor. Essentially, we're going to do a bull call spread above the stock, hoping it goes up. And we're going to do a bear put spread below the stock, hoping it goes down. We're going to do both at the same time so that we have a bull and bear trade, which makes it bi-directional. So in terms of the month that I'm choosing here, Greg, I went with the expiration right after earnings, July 22nd. So July 22. And you know that this is after earnings because if you look at the IV on the right-hand side, 69% is the July options, 122 is the next one. So why the big increase in uncertainty? Well, because there's this earnings announcement, okay? By doing just a 9-day trade, Greg, it is more aggressive. I'm going to get quick resolution. I believe the earnings is on the 19th, right? So you're only going to have about 3 days after earnings to get to max gain or max loss, right? So if I wanted to dial this a little more conservative, I'd go to the August monthly, but I'm feeling froggy, as Coach Mark would say. So I am going to, let's start with the bear put here, Greg. Let's buy the 155 put and sell the 150. Buy the 155 put and sell the 150. And cost me $1.20. So for that trade, I want the stock to go below 150. Okay. And then for the bull side, similar distance out of the money, I'm going to do a 205, 210. We'll buy the 205. Yep. And sell the 210. Okay. Paying $2. Yeah. Go ahead and analyze it. Perfect. So this is what a debit condor or inverted condor looks like. It's the regular iron condor flipped upside down. So the guy who's on the other side of your trade wants Netflix to chill out and not move. I want it to move a bunch. If I look at my break evens here, Greg, I'm around 153 and I think 208. Yeah, go ahead and set them. Perfect. At 207, 153. Put them on the chart. Put them on the chart here. Perfect. So essentially what Netflix needs to do is pop outside of the range it's been stuck in for the last few months, right? So I need a catalyst to push this above 200 plus or down below 150. What's interesting is it's not shown up there as the market maker move, but essentially the expected move for Netflix over the next 9 days is $25. $25. Yeah, if you look at it, it's actually 27. Just look at the IV on the right. Yep. Plus or minus $27, right? My break even is effectively plus or minus $27, right? So essentially, I'm betting it's going to move more than expected. If it doesn't, I'll lose. If it does what it did the last couple of earnings announcements, you're going to have some profit here, right? And what I like about this, Greg, is if it I'm risking 2 to make 3 basically, right? Around 300 is my max gain if it goes up and stays up. And if I'm wrong, look, if I'm wrong, I mean, we could model out the drop in IV, but it's not like I'm risking 3 to make 1, right? It's a pretty balanced kind of 50-50 type of bet with risking 2 to make 3, right? So I like the asymmetry on the payout, and I think it's fair for a 50-50 type trade. And Netflix has really rewarded bidirectional trades. So that's my play. Bidirectional inverted condor on Netflix.
All right, I just have one question. Did you actually say the guy on the other side of this trade has to Netflix and chill? Is that what I heard you say?
That's what I was thinking.
That's what you were thinking? Okay. No, yeah. So if history is any kind of indication, the last 2 earnings have been crazy. And even the ones previous to that, you're typically getting a fair bit of movement here. I guess the only question, would it be priced in or not? Right. So,
right.
The last 2 would have made you an absolute fortune. Right. So,
well, and I feel like too, Greg, not to interject, but I feel like too that even if we're wrong, you're not going to lose the whole $2. I think you can unwrap the thing the next morning. Like let's say Netflix doesn't move on earnings, and it just opens unchanged the next day. You're going to get hit with the vol crush, and there's only like 2 days left after that. I bet you could probably get out of this around $1, right? So I feel like you're maybe risking $1.50 to make 3 with decent odds. Yeah. I think it's a fair play. I think it's a fair play if you want to go bidirectional.
Yeah, I think it's a typical earnings kind of trade, right? It's a neutral type trade where you're saying, hey, I don't care if it goes up or down as long as it goes a certain distance. So yeah, I don't have an issue with it. And like I said, if recent history is any indicator, Netflix has been punished, and honestly, with just the general malaise in the market, I could honestly see them getting punished again, especially if their numbers, like if their subscriber numbers have dropped again for whatever reason or anything like that, any negative news. Yeah, I think this thing could honestly crater again. So yeah, I don't mind the trade at all. So
hey. Interesting opening salvo here. So let's put up the poll tan. So you got back ratio on Mickey Mouse on Disney versus inverted condor on Netflix. Probably the 2 most interesting directional plays we've pitched here. So
well, for now.
For now. Maybe they will get a little more complicated. But the next 2. Before you tee up round 2 here, Greg, reminder to everybody, go jump on Discord if you want to hang out with Coach Matt, putting in his commentary on our picks and everything. He's live over there right now, breaking down the picks. Enough with the deltas. Okay, Greg, what you got on the cash flow side?
All right. So I had, I gotta throw this in there. This is a trade I found that I absolutely loved. And then of course, earnings came to haunt me. Everybody that we hang out with this in this community knows how much I love Goodbye Motors here. I mean, General Motors. And so I looked at this thing and I started to salivate in the fact that, I believe this is going to stair step down yet again. And of course, earnings is July 26th. So I threw that right out the window. Had a tough time, honestly, finding some decent cash flow trades without earnings popping up. That's what we're into, right? The banks are reporting the end of this week, early next week. That's kind of the kickoff to earnings season. And so it did make it challenging. So, when things are challenging in the stocks, there's always this game called the ETF game. And so I decided to go deep into the ETF list here. Something that I thought kind of looked really promising here. So natural gas, much like oil, had a crazy run to start the year. Kind of got beat up a little bit on the way back down here. Tried to rally here, did so up to the 20 there, but this 20 is proving to be very, very formidable. The last 3 days, yes, we had a green doji today. But the last 3 days, it's tried to get and close above this 20, and it's just not happening. This to me sure looks like a bear retracement to me. Now I could be wrong, you know what I mean? It wouldn't be the first time I'm wrong, but it sure looks kind of like a bear retracement to me. There's definitely indecision. That's what these doji candles are all about. The big red candle yesterday didn't give me any warm fuzzy feelings that this is going to the moon. So what I liked here was a cash flow trade. If I'm going to do a cash flow trade, it's usually going to be an out of the money, credit spread, or, if it were the bottom side of naked put, or some kind of, cash flow trade like that. And so for me, when I do those trades, I need some cushion. I like to have a little bit of leeway. And so what I looked at here was I looked at a couple of things. I looked at this 50-day moving average. Typically that's going to present a problem, or present at least some kind of resistance to a breakout. And that happens to be right around this 26 level there. And then there was some more support resistance right around this 27 level here. So my thought process was, I'm looking at a bear call here because, again, I do feel that this is a bear retracement. I'm looking at a bear call here, but I wanted to be above these two levels there. So what I did was I went in and I looked here, and I went to, again, the August. Whenever I get this question asked quite a bit. Whenever I get to a point where I'm close to 30 days, but I can do monthly options as opposed to the weeklies. Monthlies always have more liquidity in them, so they're better off. I don't mind giving the game here an extra 7 days to get that extra liquidity. So that's why I went to the 37 days. Normally I will look at 30 days, but 37 is just as fine. So like I said, bear call here. Kind of looked around. I saw the 28 or 29 delta here was the 28 price level here. That got me above both my resistance points here. Okay, got me above that 50, and it got me above the resistance at 27 there. So I felt really good about the cushion. Now the question is, could I get enough money out of the trade? So I want to sell that one, and I look to go about $3 wide on this one here. Looking at the 31. So 42-cent credit here. Now this is a wide bid-ask spread, so I may not be able to get all of that. I honestly would be happy with anything 35 cents and above. Right, I'd actually probably put this in at anywhere from 38 to 40 cents and be very happy with that. That's a 29 delta option there, so you're looking around a 70% chance that it'll stay out of the money on this particular trade. So nice little easy credit spread, 42 bucks on a contract here. You've got a lot of cushion here. You've got headwinds as well pushing this stuff down. Yeah, just your garden variety ETF cash flow trade. Yeah, that's what I got for you, Ty, man.
I dig it. All right, let me give you, here's what I like, here's what I don't like. I like the pattern. I like that commodity stocks have been broken, right? Oil's been rolling over, copper's been rolling over, soft commodities have been rolling over. I dig that. I like the distance out of the money. 28.31. I think that's a great margin of error, right? The reason UNG is attractive from an option selling perspective is because it's crazy cuckoo bananas. It moves a lot, right? So the part I don't like about UNG is that it's crazy. And this sucker goes up when it goes up. So I think the back is broken, right? Like it sure seems like they broke the back of the uptrend, and it's unlikely to reignite, especially with what's going on with other commodity prices souring and everything. So you're probably good. Yeah, my only thing is I'd sleep with one eye wide open with a bear call on this sucker. Yeah.
Fair enough.
Yeah. All right. I'm going to go the other way. I'm going to go bullish. You did a bear call. I'm going to do a bull put. Okay. Show me Roblox, RBLX. So we have seen, listen, in a month, I feel like people that have been cautiously optimistic over these bottoming patterns in growth stocks, we're either going to be quite pleased or we're going to be like, oh, come on, you had such a good chance, right? Such a good bottoming pattern. And I'm hoping that we get a positive resolution out of this. So when you look at ARC type stocks, high growth, high beta, the types of names that did really well after the pandemic that have subsequently got dismantled and destroyed, those that are bottoming right now, Roblox is definitely one of the best. I've pitched biotech the last 2 weeks in a row, so I'm like, I got to lay off XBI. So I got to come up with something different today. And I think I mentioned Roblox last week, so I'm going to pitch something on this today. From a price perspective, I like this pullback. Last week, a lot of these growth names looked pretty good, but they pulled back aggressively this week, and it was too strong of a sell-off. I like that Roblox did not sell off too aggressively. It's kind of mimicking or mirroring what it did on the previous bull flag, right, 2 weeks ago. Yep. So we're sitting right between the 20 and the 9 EMA. Got a nice little doji. I also love the volume patterns. You've got continuous high volume up days showing institutions accumulating this. So listen, if I'm going to buy a dip in the growth area, this is probably my favorite pick outside of biotech. How do I want to structure it? Listen, I would love to go directional and go crazy bullish, but the market just punches you in the face every time you try that business. So not going to screw with that. I'd rather go high probability, have a wide margin of error. I want to do a bull put spread, but this has earnings on August 9th. I can't use August monthly options. Okay, I got to use options that expire before earnings because Roblox moves a lot on earnings. This is a mover and a shaker. It's a recent public company, still in its infancy. So it moves a lot. So I'm going to use August 5th options. And then just using our traditional guidelines for a credit spread, I'm going to go as far out as I can and still get a pretty good ROI. And that takes me to the 29, 24, 29, sell the 29, 14 delta, buy the 24. You got an 86% chance. You're at 55 cents on a $5 spread, getting over 10% return, checks that box. And when I look at, see, I would probably get stopped out of this if it goes down and hits 29. I think you're going to run out of time. When I do which I hardly ever do these, but when I do like a 3-week bull put, there's not a lot of time in there to manage and maneuver and scale in and stuff. So Greg, if I don't want to hold this into earnings, I'm probably out of this sucker if it hits the strike. I think 28, unless you want to use a higher support level. And so at 28, I don't know what the, just jump to the chart. So either 28 or maybe a break of the 50-day moving average at 32. I'd usually just use the strike though at 28. I think that gives you a pretty good margin of error. You'd have to break a couple of support pivots plus the 50 MA and then some. Essentially unravel the entire rally of the last 3 weeks. So I like the margin of error, and I like its current momentum here, Greg. Also I need a trigger. It's got to go above today's high. You got 3 down days. Could be a 4th, could be a 5th. I don't know. I don't know what the market's going to do tomorrow. So I want to see this show some strength tomorrow, or else I would wait. Could be better in a day or two if it comes down a couple of days more. But I want it to go above today's high as my trigger.
Nice. Yeah, I think the thing I like most about this is the higher highs and higher lows, right? Nice little channeling action here. I think that's probably my favorite part of this whole trade. I honestly have shied away in this market from any of these names. I was never big on these names anyway, but I do like this. This is pretty productive when you look at it as a backdrop against the actual indexes themselves, right? Mm-hmm. So yeah, it's I don't hate it. I like the cushion. I'm a big fan of anything under the 50 moving average. Chances are you want to tap out after that anyway, because not a lot of things, it's like your parents say, nothing ever good happens after 2 a.m. Well, nothing ever good happens below the 50 moving average, right? So
2 a.m. I must have had helicopter parents. It was like 11 p.m. for me.
There you go. But as you can see here, as soon as this got below the 50, nothing good happened to it. And now it's above that 50. So I think that's a really good spot, just kind of a, just kind of a concept to live by really is, above that 50 works really well usually from a bullish perspective. Below it, not so much. So
Well,
I like.
Go ahead. Go ahead and finish.
Yeah, I just like where you placed it, right? I like the cushion you've given yourself. You've given yourself an opportunity to be right. And worst case Ontario, if it hits your 29, you take your lump, you lose your $130 or whatever it is. If it happened tomorrow, obviously, and you just call it a day. And it's an easy trade, and it's quick, really, right? Like August 5th isn't really that far away, right? You're talking 3 weeks, so
and
it's a good deal.
The other thing you could consider if you're going to use the 50 MA as the exit, maybe bump up the strike to 30, get yourself a little more juice. You're still below the 50. If you want a little bit tighter stop, maybe you don't need as much room if you're really anchored on the 50. So maybe short the 30 or 31. Get yourself a little more credit. Yeah, I dig it. Thanks for the feedback, Greg.
Good deal.
Okay, so
apparently nobody likes my my Disney trade. Everybody still loves the mouse, Tyler. You're in good company.
Listen, you can't bet against Mickey Mouse, even though Mickey Mouse has screwed us all for a long time here recently.
He certainly has. Have you been to the theme park lately? $14 for a turkey leg. What are you saying?
You want an $8 churro? $8 churro?
Yeah, that's right.
Yes. No, it's a little ridiculous. Maybe if I stop losing money on Disney stock, I'll have enough shekels to go play over there. But at any rate, round two. Oh, look at this. Tan's quick on the trigger, Greg.
He's on top of it.
Oh, he's already on top of it. Yeah. All right. So Roblox, bull put, UNG bear call. Let's see how she shakes out. Wild card round, Greg. Let's get wild. I got an iron condor coming down the pike, but tee this up here. What you got first?
All right, man. I will throw the disclaimer out now. I'm probably 8 shades of insane. But you know what? If that's the worst thing I've ever been called, I'm okay with that too. So can I guess? Okay, so now that I know the ticker is Coca-Cola. Okay. Yeah. I'll bet you $1,000 right now. You can't guess the trade I'm going to do on this.
I don't think you go directional. So I don't think you're going to sell a put and buy out of the money calls. Maybe you would. You're going to, okay, give me a hint. Is it more directional or more cash flow?
More directional.
I have no idea. Just go.
Yeah, we could have waited all day. You weren't going to get this one because honestly, I didn't even. This just came to me when I was doing it. Anyway, let me throw the preface up here. Okay, Coca-Cola has been had a nice little rebound here. Little pullback here, just hanging on to that 20. All the moving averages are gapped together here. You got your 9, your 50, and your 20 right here. What that tells me, and this is just strictly experience talking, is there is a move coming in Coca-Cola. There is something going to happen here. Typically, when you get those moving averages all bled together, it goes for you, right? Now, in all fairness, the earnings, just for everyone to know, is July 26th. The trade I'm going to do, I don't care about running it through earnings. Normally, I would not trade something through earnings, but when you see the trade that I built, you'll notice why I don't really care about earnings, okay? The other part, the reason I don't care about earnings is typically with Coca-Cola, earnings really doesn't mean that much typically. Sometimes it moves, but not crazy, right? It's not one of those wild tech stocks or anything like that. So earnings really doesn't bother me with Coca-Cola. So I'll preface that right now. I like this little pullback, and I honestly think I was looking at consumer staples today, XLP. I like this kind of high base setting up here in consumer staples. Looks a lot like Coke on its rebound here. You got reversal analysis. I kind of like where the staples is fitting there. And Coca-Cola's in that kind of ballpark, right? So I like the little pullback here, giving us an opportunity. I'm betting that this thing is going back up, okay? And my bet is that in due time, this could get back up to at least this 67 mark here. I don't think that's asking a lot, maybe only 66 and change, close enough, right? So I thought about this and I thought, okay, what do I want to do with Coca-Cola? I like it as a cash flow trade sometimes. It doesn't give you the biggest credits, but it's also, I would say, somewhat more predictable than a high flying stock. Okay. It's usually, it's a blue chip. It's not manic like UNG, like we talked about, right? It's a little bit more conservative, right? So I thought about a cash flow trade here, but then I thought, well, with these moving averages all together, I think I want to take advantage of some upside as well. So here's the crazy trade I came up with. Okay. All going out to August 19th, using the weeklies again. Okay. My trade is I'm going to sell the 57.5 put, naked put. I'm going to take some of that money. I'm going to go buy the 65 call. Okay. I didn't want to pay a debit on this, so I decided that I'm going to sell the 67.50 call. So you'll notice that this price says 0, the natural price being 6 and the actual mid price being 0. If we look at this, I'm going to go to the Analyze tab here. This is what this trade looks like. Okay. It's right on the 0 line. That's if you can get filled at 0. I don't know if you can. Maybe it costs a couple of pennies, whatever, right? It's going to be close. This is a kind of trade where I would just put it on at 0 or 1 or 2 and just see if it gets filled. So here's the kicker for this trade. Okay. It has to go up for us to make any money. It has to do what I expect it to do here. And that's to move, in a certain direction because of these moving averages coiled together. That's what I'm expecting. If it doesn't move, okay, all the way down to 57.50 here is where I would have a stop loss. Okay. I would not let this go any further than that. Okay. You are taking some risk here. If it gets to 57.50, sorry, tomorrow, you're risking $190. So there is risk in this trade. Okay. That would be where my stop loss would be. I would not want to let it go because you do have an open-ended risk graph. However, if we look at the distance between 57.50 and 65, that's a long way as it starts to decay here where it's break even. Okay. It basically has to get above that 65 to get up to make us any money. However, if it does get back to that 67, we're looking at potentially at expiration, a couple $100, right? 200, $250. So if I can get into a trade for pennies, right? And, even have the potential to make $250, let's say if we can get this in for 0, this is what you'd call an infinite return. Okay. So if I can get into this for 0 and let this run the clock out, and it gets up to that 67, I would actually take whatever I could get up there if it does get up there. But over the next 37 days, if it can get up there, that's what you call an infinite return. So this trade, as crazy as I think it is, I like the way that it sets up, and I like the fact that I can get into this for very little money. And my only real risk is if this thing happens to crater, and I know that I've got, what's today, the 13th. I know I have 2 more weeks for this to move. So over the course of 2 weeks, as the time decay clicks along, this purple line, depending obviously price, is going to get closer to this blue line. So the damage should be less, even if it does fall down. So a pseudo risk-free trade at expiration here with a very wide berth with a potential to make some upside out of nothing if all goes well. That's my wild card trade.
Okay, interesting. So man, I should have continued with my guess because I started with naked put, and I'm like, he wouldn't buy an out of the money call. So what I would call that, Greg, it's a play on a risk reversal where you sell a put and then you buy upside calls. You're just doing selling a put and buying an upside call spread. Yeah, I like the trade structure for Coke. I think it's a good match for the chart. 57.50 is pretty far down there, right? So I like the distance out of the money that you're getting. And
actually, I forgot to mention that. Yeah, so actually 57.50, the reason I chose that is it is a key level of support back here, or a key level of resistance and a key level of support here and here. That's actually why I chose. I forgot to mention that. Thanks, Ty. But yeah, that's why I chose 57.50. It's a long way away.
I like the distance. And a 65, 67.50 bull call spread does match, right? You think he gets the 67.20 or whatever. So it's actually a really good example of how you can use options to structure a position, right, that matches your exact opinion on the chart, right? You were very precise in doing that. The only quibble I have is, just because the debit is zero doesn't mean it's no cost, it's no debit, but they are going to hold aside capital for that naked put.
Fair enough.
Right. So technically, whatever the capital requirement is on the naked put is going to be the cost of the trade. Yeah. So
they're going to hold $1,500 a margin.
Yeah. So it's not infinite, but anyways, but I think it's a great trade. I think it's a great trade. I like the structure, and it is wild. It's wild.
It's about as wild as I've come up with in a while. So,
all right. So I dig it. Coca-Cola naked put bull call combo trade. Give me rut. Give me the rut. Listen, when the market gets wacky and messy, and you don't have confidence in directional trades, you do something like we did on Netflix, like a bi-directional. That's an event-driven trade. Or you just throw your hands up on the market. You say, listen, I'm not picking a direction, right? I'm no dummy. I don't have an edge here. Let me just lob a far out of the money bear call and a far out of the money bull put. Volatility is high right now. You're going to give me a good profit range. I just want cash flow play without having to worry too much about the day-to-day movement back and forth in the market, right? That concept is appealing to me always, but especially in this type of environment where it's a battle going on right now in the markets, right? It's a battle. In addition, we have a premium system at Tackle Trading. It is the cash flow condors. And tonight, after Trade Masters, is our monthly mastermind meeting. So I was prepping for that anyways. I'm like, listen, I'm going to double dip. I'm going to use my September condor trade for Trade Masters, because I actually like the range and everything. So the way that we build these is typically on an index. So we're going to use the Russell, and I trade these 2 months out to give me a really, really wide range. And we usually enter around 60 days out. So we're getting close to where the September trade should be entered. And these are very high probability. We sell single delta positions, delta around 8 or 7 each side. But we still get over a 10% return. So on the bull side here, Greg, I was able to get, let's go 1380, 1370, sell the 1380 put, buy the 1370. This is a $10 wide bull put. I usually like to get at least 60 cents per side. So 70 cents is perfect. And again, the delta on the 1380 was 8 delta, so very low. And on the call side, I want to match that. Sell around an 8 delta, $10 spread, get me around 60, 70 cents. And I got to 1990 and 2000 for the bear call. Sell the 1990, buy the 2000. If you got $1.35 total, means you got 70 cents on the one and then 65 on the other, right? So the credit per side is pretty on point. And that also had around an 8 delta. So you take a look at the risk graph here. Take a look at the risk graph. We'll sit on this one for a second here, Greg. This is how we build cash flow condors. Okay, so this is a perfect example of by the book structuring the position. I can make $130. Usually we get stopped out if we hit either strike. So 1990 on the upside, 1380 on the downside. Risk, Greg, should be around $3.5, right? 3 on the bull put, probably 3.5, closer to 4 on the bear call. Yep. That's typical. That's how the trade works. Set me to break even, Greg, and throw them on the chart. Let's look at the range, because this really is the kicker. I don't have a strong directional opinion, and so I want a trade that has a really wide profit range. You're probably gonna have to zoom out to a couple of years. So maybe even give me like a 3-year weekly or 5-year weekly or something like that. Yeah, 3-year weekly be great. Okay, so red lines are the break evens, right? So 1390, 1380. Listen, you're the bear, Greg. You think we go to 1380 by September?
Yeah, it's quite possible.
You wouldn't say that. You're up in the night, dude. There's no way we're going to 1380.
No, that's you're a long ways away.
Yeah, so we listen, anything's possible, right? That is 44% off the highs, right? So that's the major index getting close to being down 50%. Pretty pessimistic, right? Greg said we could get there. I'm with Greg. Greg still will grant me, because he's not insane, that's a low probability event, right?
100%. Yeah.
So I feel comfortable with the range, in other words, right? So I feel like the downside, I feel pretty good. If anything, Greg, I'm actually more concerned about the upside at 1990, but you're still 265 points away. Like, that's still a pretty good distance out of the money. So the point is, I'm digging the range. I think the September condors are interesting. And quite honestly, this year, condors have done quite well. Even though the Russell's gone down as much as it's gone down, Greg, it's done so in such a stair-step fashion that darn near every month has been a winner for the condor. I think maybe we had 1 month that hit the bull put. So I feel comfortable with the recent history, with the trajectory, the descent, and the distance out of the money with this. That I think it's a good play.
Yeah, I can't fault it at all, because I've used this strategy many times myself. Yeah, I would be more concerned about the upside, but like you said, you got a lot of distance. You've got a couple of moving averages there. You've got some levels of support or levels of resistance there. So yeah, I don't have an issue with that. And hey, in your cash flow condors, you teach folks how to protect the side that's getting threatened anyway, right? So there's always that too, right? So it's not like these things are just static, right? We can learn skills in your course to dynamically practice these and dynamically trade them, and that makes it a little more fluid and a little more easy to handle if things do get a little bit funky here. Because again, I'm expecting at some point a pretty crazy rally here. Do I expect it to get up those 200 points? Who knows? Hard to say, but we'll be prepared with your mastermind group regardless, right? So.
Yeah, and it's always easier to hedge on the upside because most of your other positions are bullish anyways, so you got like a natural hedge. But all right, cool. Put up the poll, Tan, just for kicks, Greg, because UNG went down in flames. But rut for me, a Coca-Cola for Greg. And I don't know that there is a specific name for a naked put out of the money bull call. I would just refer to it as a combo, a naked put bull call, a quasi risk reversal if you want. But yeah, I dug both of them, Greg.
Yeah. We'll see if I can at least grab one leg here, one leg of the 3-legged stool. So congratulations. I honestly thought I'd do a little bit better with those picks, but you found the sweet spot again there, Tyler. Congratulations. So
I feel like I probably packed the room with friends and acquaintances.
You mean with your lab people? Is that what you're saying?
I mean,
which also happens to be on Wednesday.
All's fair in love and war, but listen, when Trademasters gets up to 1,000 participants, the majority of which I don't know, we'll see if the charm goes as far, my friend.
For sure.
Okay, so here's a question while we're waiting on this. I'll tell you my favorite trade of the ones you pitched, and I want you to tell me your favorite trade of the ones that I did.
Okay.
Disney was not my favorite trade. That one can go in the trash can. And that said, I've been wrong on Disney all the way down. So don't, for all I know, the sucker's going to 8. Okay. I'm spite veto.
Spite hating it.
Yeah. I think Coca-Cola was my favorite. I like the Coca-Cola play. That was my favorite of the 3.
Yeah, it was something that I like getting creative with the option strategies, right? It's kind of fun that way. And, if you can get down to not a risk-free trade, but, for a very low debit in these particular markets. I had another trade today, a broken wing butterfly that was 38 cents, right? I love these kinds of trades in these kinds of market because of the uncertainty. So yeah, Coca-Cola was something that was fun. So out of yours, I'm not thrilled about the Netflix. I do think it could cash, right? What really, like, because I looked at Netflix myself today. It's just lost its personality to me, right? So you're basically betting on whether it has more either really great news or really bad news, and if it doesn't have any news at all, if it just meets expectations and their subscribers didn't change, you could get a very muted response, right? So the one that I do like the most that you did, I love the wrought iron condors. Like I said, I've done those many times, but I actually like the Roblox. Something that I've been noticing. So companies like Roblox, Chewy's been looking pretty decent, right? There's a lot of these companies that have just been absolutely destroyed. Look at the rounding bottom on Chewy here. Like, is that not crazy or what? That's a thing of beauty as far as I'm concerned, right? So things like that. I really like the way Roblox is setting up. I don't have this on my watch list. I know you guys bring this up on the scouting report meetings quite often, and for good reason. Really nice bull flag here. It just did the same thing 2 weeks ago. This pattern is extremely pretty to me. It's above all the moving averages. All the moving averages are lined up. I absolutely love this trade. This one, for me, I actually would like to do this maybe even like a poor boy covered call or something, right? Because I think if you give this enough time, you've got a resistance level at say 52, but then you've got an opportunity here to get up to that 63 level to where that 200 is. So, and that's not going to happen tomorrow, right? I just really like the setup of this, the reversal characteristics. It's had its beat down. It's starting to work its way higher with the higher lows and the higher highs. Just very pretty setup here. So for me, that trade was top shelf as far as I'm concerned.
Yeah, no, I obviously I agree, and I'm glad you picked that one. I've wanted to pull out poor boy covered calls, but I'm just like, listen, I swear, as soon as I buy a 3-month in the money call, these uptrends are going to get torpedoed, right? Earnings season isn't going to be good. We're going to have another down leg in the markets, and then I'm just not brave enough yet, man. I'm just not brave enough.
I hear you. Again, like I said, the stuff that I've been doing recently has been all fixed risk, right? These butterflies, broken wing butterflies, I love those because it's low fixed risk, because I don't have a good feeling on the market, right? I'm leaning to the bear side, obviously, because I think you have to when you look at the indexes. But I know in my heart of hearts and from experience that we're going to have some crazy rally real soon. You know what I mean? And then we can, once that gets over, then maybe we get a better head on direction at that point. But for now, as Mark talks about it, he's just picking little things here and there, picking up little things here and there, right? He's not going all in on anything because this really isn't the environment to do that as far as I'm concerned. So,
Well said, Greg. Well said. Listen, you almost got me with Coca-Cola. You almost got me. So
it was close. It was a lot closer than the other two anyway.
It was respectable. That's for sure.
All
right. Well, let's wrap this up. I got Cashflow Condors Mastermind Group meeting. Any pro member of tackletrading.com can join that, even if you don't have the Cashflow Condor system. So if you want to see what we do on those monthly meetings, I'll be on in like 5 minutes. 5 minutes. Go to the shows at the top of the page. Tackletrading.com, top of the page. Go to shows. Go to Cashflow Condors. I think it says Mastermind. I can't remember, but or hit us up in Discord and I'll give you the link. With that, I'll be back next week. Greg, I'll look forward to seeing you back next time. You brought it this week, and well done.
I appreciate that, sir, and congratulations. And for all those in our community, I will be on the Cashflow Club tomorrow night, so I look forward to seeing you all there, and then on the scouting reports on the weekend. So everybody have a great day. Thank you, Tyler. Thank you, Coach Matt over in Discord. Thank you all for watching. Appreciate it.